The following represents some of the main issues and conclusions emanating from this important meeting. On the issue of monetary stability, the Council received the Governor's report on monetary and credit conditions to the Eastern Caribbean Currency Union based on developments during 2018. The report focused on recent months and monetary and credit conditions as of the 31st December 2018, against a backdrop of global economic and financial developments and within the context of the bank's broader objectives of ensuring the stability of the exchange rate and the financial system. The Council was apprised of the following. One, the global growth is forecasted to be at 3.5% in 2019 and 3.6% in 2020. Two, the U.S. growth is forecast to be 2.5% and 1.8% in 2019 and 2020, respectively. Three, the growth in the ECCB is projected to be 3.1% in 2019 and 3.6% in 2020. In 2018, the weighted average deposit rate and weighted average lending rate stood at 1.5% and 8.3% respectively. Lending rates continue to trend downwards. Domestic credit in the banking sector declined by about 5.3% to $8.6 billion, continuing the pattern observed since 2012, and was largely influenced by lower credit to the private sector, but mitigated by a decrease in net credit to the governments. That said, credit extended by the credit union sector increased, and that was supported by a stronger economic activity, money and credit conditions in the ECCB as expected to be improved in 2019. The net foreign assets stood at $4.6 billion at the end of November 2018, an increase of 2.6% over the November period of 2017. And the last one, the EC dollar remains strong with the back-in ratio at 31st December 2018 being 98.6%, which is considered to be extremely good. The second issue of financial stability. The Monetary Council received the preliminary financial stability report for the ECC Union for the period January to December 2018. The report reveals that the ECCU financial sector remained broadly stable throughout that entire period of 2018. The report also indicates the following. One, the development in the ECCU banking sector through 2018 was largely very positive. Secondly, the insurance sector was assessed as broadly stable and solvent with increase in premiums. Profitability was reported to have improved following the tumultuous events of 2017. Thirdly, several ongoing initiatives would enhance financial stability. These initiatives include the implementation of a risk-based supervisory approach for the commercial banking sector, regulation of the Caribbean Credit Card Corporation, and the establishment of a credit bureau in the ECCU. Council also considered the proposed framework for identifying systemically important commercial banks and credit unions in the ECCU. 12 institutions were identified, of which 3 were banks and 9 were credit unions. While commercial banks continue to dominate the financial sector, credit unions were expanding, becoming an increasingly important source of credit to the private sector through increases in membership, assets, loans, and deposits. The boom in credit union activity has implications for the financial inclusion and the financial stability framework. With respect to the ECCU Credit Bureau, Council was informed that the enactment of the Harmonized Credit Reporting Bill remained outstanding in 4 member countries. Council also agreed these countries must move to enact its laws by the end of March 2019. Two key responsibilities of the Credit Bureau are to provide credit granting institutions with better means to access information and to facilitate the extension of credit to underserved segments of the population. The fiscal and debt sustainability. Council was apprised that within the ECC member countries, fiscal balances improved in 2018 compared with that of the previous year. In respect of the debt to GDP ratio, a target of 60%, the most recent data indicate preliminary ratios of 70.3% and 71% for 2017 and 2018 respectively. The fourth area, the growth and competitiveness. Council noted that the ECCU growth was estimated at 2.7% in 2018 and is projected to accelerate to 3.1% in 2019 as the recovery from the 2017 hurricanes continue. Several factors contributed to that outturn, including improvements in the tourism and construction sectors. Council was also informed that several key reforms and investments were needed to expedite and raise the current growth trajectory to the 5% growth target required to support socio-economic transformation. In this regard, Council recommended that countries implementing the actionable items of the annual Growth and Resilience Dialogue. These include enactment of fiscal resilience frameworks, improving the business environment, improving regional transport infrastructure, increasing access to credit, enhancing skills training and apprenticeship programs, and harmonizing building codes. The fifth area, report from the Technical Committee on Insurance, BICO and CLICO. Council noted that the joiner application of the CIL-JM Montserrat was heard in the Barbados High Court on October 26, 2018 and was dismissed. An application for leave to appeal to the CIL-JM Montserrat regarding the judge's decision was scheduled for hearing on the 27th of February 2019. With reference to BICO, Council noted that the second distribution of approximately $30 million EC is planned for 2019. Council noted that all efforts are being made to seek redress for the benefits of the ECCU and matters related to BICO and CLICO. The sixth area, the date and venue of the next meeting of the Monetary Council. Council agreed to the convening of the 94th meeting of the Monetary Council would be on 26th of July 2019 in Montserrat.